Time now for an in-depth look at the market news on this Monday, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, good afternoon. Thank you for coming on today.
Happy to be here.
Well, let's start with stocks. Wall Street ended on Friday significantly higher for the week, with companies reporting strong earnings. Goldman Sachs was one of those companies. Its shares up 3.8% for the session. Other big banks up too, like B of A and JP Morgan. What's the story in the global markets as we start the week?
Okay, well, U.S. markets started to recover and rise from Wednesday the 13th of last week and generally had a great week. Problem is, we're not quite sure why it had a great week. The earnings report certainly had a lot to do with it. If you look at the analysts, then they say that it's due to general optimism. That's despite the Fed's signaling last week that there's going to be higher inflation and tapering will begin soon. Perhaps the investors just had enough of gloomy September and gloomy early October. On Friday, the U.S. stocks had a great day. Dow gained 1.1%, S&P 0.8%, NASDAQ 0.5%. And for the week entire, Dow gained 1.6%, S&P 1.8%, and NASDAQ 2.2%. And now all these indices are very close to approaching the all-time highs again. Dow is only about 0.9% below a record high, S&P only about 1.6% below, and NASDAQ about 3.3% below. One factor that is helping the market gain is stronger than expected consumption. A lot of people expected consumption to fall because it may run out of steam and the inflation is making all prices higher, but U.S. retail sales rose 0.7% in September despite the higher prices led by expensive automobiles. So it seems like consumers, or at least those who have enough money to buy, are not really put off by higher prices. And the holiday season is beginning in the U.S. Holiday season is expected to start earlier this year because of the supply bottleneck that we've been experiencing all over the world. And the earnings report is continuing to be strong, which is also feeding into higher stocks. 80% of 41 S&P companies that have reported third-quarter results have topped earnings per share expectations. European markets, they also began to rise on the 12th of last week, but today at early trading, the markets are falling. Asian markets are down today after a similar upward trend last week. The Asian markets seem to be hit by the lower expectations of Chinese growth as well as lower than expected industrial production.
And here in Korea last Friday, we saw the benchmark KOSPI rise back above 3,000 points. We'd seen local stocks decline day after day for a while. Today they were down again, but still holding that 3,000 point threshold. Tell us about the domestic market.
Okay, well, today was a mixed day. As you said, the KOSPI is down, but KOSDAQ is slightly up. And the reason seems to be, again, China, the slower than expected growth and lower than expected industrial production. Industrial production rose only by 3.1% when analysts expected 4.5%. Now, China is going to experience a lot of problems in the next few weeks. Higher raw material and intermediate goods prices, electricity shortage leading to production decline, the problem with Evergrande, which may cause not only problems in the financial market and construction markets, but may lead to lower consumption overall as the stock markets take a hit. And consumption numbers are smaller than expected in September, only 4.4%. So a lot of private analysts have expected China to have a higher than 8% growth this year, but now they're readjusting those forecasts. But the government forecast is only around 6%. So in a sense, the private analysts may have overestimated how well China will do this year. KOSPI closed today at 3,006.68. Individuals bought, institutions sold. Foreigners sold on the net, but only a tiny bit, so they're more or less holding steady. KOSDAQ ended today at 993.86. Individuals bought, foreigners sold. Institutions technically sold, but again, not that much, so they're more or less holding steady.
Well, in the meantime, we see oil prices inching higher and higher, and combined with the recent weakness in the Korean currency, we'd expect consumers to start feeling the impact of that, and indeed prices have been rising. How do you see that impact happening, and what, if anything, ought to be done about it?
Okay, well, in the September inflation report for Korea, gasoline and oil prices generally rose the highest of all major items except some fresh food items. If you look at the September inflation for past 12 months, gasoline rose by 21%, diesel oil rose by 23.8%, and LPG for automobiles rose by 28%. Now, globally speaking, the price for barrel for West Texas Intermediate oil is about $63 per barrel right now. It has risen from coronavirus low of $16.94 in last April, and compared to the pre-coronavirus high of January last year, it's even higher than that. Last January, it was only around $63. Last time the price was around the range where it is now, $83, was October 2014, and prices are likely to rise for the near future. First of all, the current global recovery, or at least recovery among advanced countries, are driving up demand. Second, OPEC and oil producers have come to an agreement not to increase production volumes to keep prices high. Third, the supply bottleneck is also affecting some oil producers, so there is limited supply. And fourth, there's expectations of further recovery and a lot of monetary liquidity because of the loose monetary policy. So part of this price rise may be speculation. And lastly, there's no competition from shale oil. Previously, the OPEC producers, they did not want the oil prices to go too high because then the shale oil producers would come in and it would lower the prices overall. But right now, the shale oil producers do not seem to be producing in the United States, probably because of the coronavirus. They're not back to normality yet. So the prices are likely to continue to rise for the near future. Well, what can the government do? There's not much that they can do with the global oil prices, but in the future, perhaps they could try to have more emergency supplies that they can try to loosen when you have rapid rise in price like these, and also they may consider some flexible taxes, which goes up when the oil prices are low and goes down when the oil prices are too high.
Well, before we go, Professor, a little on the debt situation. Data in Korea show mortgage rates edging closer to 5%. That's on the high end of the range for a variable rate. Those and credit loan rates have risen about 0.5% in the past couple of months. What can you say about that move with respect to the large increase in debt taken on by households in the pandemic?
Okay, well, there are some reports which says that 1 percentage point rise in policy rates will lead up to about increase in interest rate payments for about 12 to 14 trillion won. But because the interest rate now is so low, considerably lower than it was pre-coronavirus, the total amount of interest paid per household may be less now than it used to be before the coronavirus. The additional burden on the households should not be a reason for delaying interest rate increase, because the very reason why we're raising the interest rate is to try to reduce the household debt. So if you try to give these households breaks to ease their interest rate payments, that kind of defeats the original purpose of raising the interest rate. Now, there may be room for targeted assistance to people who need loans to make their monthly rent or jeonse because these housing prices have risen so much. But in general, if you took a loan, then you should be vulnerable to higher interest rates.
Yeah, that's certainly, it would be working at cross purposes to keep rates low for that reason. Professor, a fascinating point. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you.